Hello everyone, and welcome to episode 13 of Ask Mortgage Mike, where I take topics and questions that have been posed to me regarding the mortgage industry, and I try to educate you, the viewer, on those topics. Today, we're going to be discussing mortgage applications and you, part 2. So last week we covered some of the basic questions that are going to be asked of you when you go and take an application for pre-approval or looking into refinance. So let's go ahead and dive into question 1 today. I still have my same notes just to make sure we get all the right questions answered. Today, question number 1, have you made any large deposits in the last 2 months? So we're going to discuss assets. The reason why we look at those deposits is we have to source those funds. So if you recently sold a car and you had a large deposit into your bank account, we need to know that you sold said car. This is required by the federal government to source and season any funds that are a percentage, depending on the loan program, depends on the percentage of your monthly income. All right, so each loan program has a different percentage. Generally, it's going to be anything over $1,000. Will require an explanation or the funds to be sourced. So we would need to see where those funds came from. So if you transferred money over from a savings account of $3,000, I would need to see the savings account statement of where the $3,000 was, and then need to see that in the account or see the transfer into the account. That is within the last 60 days, so be prepared. If you have an account that has a lot of transfers and deposits into it, you're going to have to source a lot of those large deposits. Now, direct deposits don't. Those we don't have to source because they show that they're direct deposits. But anything that's not direct deposit, we've got to be able to source. So when choosing your account to use for assets, try to choose the one that has the least amount of transfers and deposits. Question number 2. What is the source of your down payment? So again, we're trying to identify where the funds are coming from for the down payment. You have a couple of options. One is going to be checking, savings, 401k, right? Cash that you have access to. Then you're also going to have gift funds. So parents, family member, brothers, sisters, we would need to source those funds from the accounts that they were coming from. So if your parents were to gift you money for a down payment, then we would need to have the gift letter signed by your parents and by you, and then we would also have to have the account that the funds were transferred into from your parents and the account that the funds were transferred out of from your parents or brother or sister or any other family member, even spouses if the spouses aren't on the loan or on sharing the same accounts. So question number 3. Is there any debt unreported on your credit report, such as child support, alimony, or garnishment wages? So a couple of things that we need to know is that if there's any debt that you've, recently acquired, so it doesn't even have to be child support or alimony or wage garnishments. It could have been a car you bought last month that isn't showing up on credit. We need to know those things. That way we can have those added on, because if the debt is pulled and added later, it may cause you to not be able to close on the loan. Alimony, child support, the reason why those are there is we need to make sure that once we pull all the data that we don't find out later that you're there, or that you have a wage garnishment, a 401k loan, right? That you're having funds paying back yourself out of a 401k loan that you previously took out. So those are 3 additional questions that we have when we go to taking the mortgage application process. If you have any questions at all, please comment below. Again, if you have any emails that you want to send me to, it's askmortgagemike@gmail.com. Hope everyone has a great week, and I will talk to you later.